Well, starting at midnight tonight, the United States will begin collecting tariffs from 86 countries, 86. And that includes an expected 104% tariff on China. So what a massive head fake in the markets today. Futures overnight continued to scream higher. This morning, just before the market opened, the Dow futures were up over about 1,300 points, something like that. The markets opened off to the races, the Dow, the S&P, the NASDAQ. And really for about the first couple hours of trading, you saw pretty good gains in the markets. Metals, gold and silver, were also doing relatively well. Gold was up $35 an ounce, I believe. Silver was up 50 cents an ounce. Cryptocurrencies were back up a bit. Bitcoin was over 80,000. XRP was making a pretty strong run back to about $2. And then you had the whole thing just collapse. And in a pretty big way, it reversed all of the gains that had been accumulating throughout the morning, couple hours this morning. And by mid-trading day, you had the markets really teetering on basically the flat line. Then they started to sell off about the last hour and a half of trading. Dow Jones finished down 320 points. The S&P down 79, and the NASDAQ down 335 points. So again, leave your comments below. Love to hear from you guys and what you think. Was this just pure hopium this morning? Scott Bessent was out and made some comments about the tariffs, which the markets appeared to, I guess, react positively to. But I didn't see any news overnight that led to this, what really turned out to be a massive dead cat bounce. So again, if you saw something that I missed, let me know. And then again, this morning, there was really nothing going on. I mean, Trump did post something on his social media account saying that, a whole lot of countries have come to the table and they're having discussions. And he thought that China would also be looking to make a deal, but something to the effect that they just didn't know how to start the conversation. So maybe that was what the markets, teased out and picked up on and ran with, but didn't last for long. So here we go. Out of CNBC, Dow tumbles more than 300 points Tuesday as tariff-induced sell-off resumes. Stocks dropped Tuesday as a relief rally proved short-lived and investor anxiety returned ahead of President Donald Trump's next tariff deadline that will see, like I said, cumulative tariff of 104% slapped on China just after midnight. The Dow dropped 0.84% and closed at 37,645, bringing its four-day loss on tariff angst to more than 4,500 points. Apple led the losses, with the iPhone maker's costs set to surge with new China tariffs. At its high of the day, the Dow was up 3.9%. So again, it was up 3.9% high of the day, almost 4%, and it closed down 0.84%. So do the math. I mean, that's almost a 5% swing just on the Dow from between the time of the open of the market and close of the market today. S&P declined 1.57%, and it finished at 4,982. The index was inches away from closing in a bear market, down nearly 19% from its record in February. It ended the session below 5,000 for the first time since April of 2024. Over the past 4 days, the S&P has fallen more than 12%. The NASDAQ fell 2.15%, ending at 15,267. The tech-heavy benchmark rose as much as 4.5% earlier in the day and lost more than 13% in the last four. So it fell 2.15%. It was up 4.5% this morning. That's a 6.65 by my math 6.65% swing between the market open and the market close. So talk about, head fake, talk about massive dead cat bounce, talk about hopium that just simply did not turn out to follow through, right? Stocks began the day higher with traders citing an oversold market as reason for the bounce. So traders, the ones that are full of the hopium, cited their reason for the bounce was because markets were oversold. Again, who is to say they're oversold? You've got experts and pundits and traders and all these people on the talking head news stations saying it's oversold. But has anybody really come out and quantified how overbought the market was since the pandemic with all of the money printing and low interest rate expansion that took place? Trump posted on social media, or on Truth Social on Tuesday, that he had a great call with the president of South Korea. And they said that helped to boost sentiment. And then Scott Bessent, the Treasury Secretary, said on CNBC on Tuesday that 70 countries had approached the United States for tariff negotiations. It says, the article says, but the market rally evaporated anyway, with shares of Apple leading the rollover. Apple shares closed down nearly 5% lower after having risen more than 4% earlier in the day on Tuesday. Again, that is a 9% swing in Apple share price from the opening of the market to the close of the market today. Apple has lost 23% over the past 4 trading sessions. Think about that, guys and girls. That is someone's portfolio that's heavy in Apple has taken basically a 25% hit. It says new tariffs are set to kick in just after midnight on top of the 10% baseline duty already implemented last Saturday. White House confirmed a cumulative 104% tariff will be implemented on Chinese goods overnight. So it says investors will need to see more stability in trade policy for any market bounce to have legs. That's according to Robert Ruggiero, Chief Investment Officer at Brave Eagle Wealth Management. Today marks a 4th session of market volatility since the rollout of the tariffs. So I think you guys are paying attention to this. Certainly if you're in the markets, you're paying attention to this. The last item of news I want to share with you, I shared on yesterday's video that the 10-year yield was somebody or something or things were selling U.S. debt at an alarming rate. I think there was some news out today. I did not follow up on it that, in fact, China was dumping some U.S. debt, but I don't really know the percentage if that's what caused the huge spike yesterday. There was some other conflicting news out last night, or another, let's say, explanation for why the 10-year bond spiked. But again, today, same thing. Even though you had market volatility and fear in the last couple hours of the trading session, you had the 10-year bond yield going higher. Finished, I believe, at almost 4.3% today, up a few basis points. But what does this also do to another segment of our economy, and that's the housing market? We know, I've shared with you on many videos on this channel, as you're probably all very, very aware, the United States housing market is literally frozen. The rates have been unattractive for some time now. Sellers aren't selling. Buyers aren't willing to pay the prices sellers are demanding. And let's say volatility, the pace of sales has literally plummeted, both in the residential space and commercial space. So again, as I see CNBC, mortgage rates and the, like I was going to say, is with the 10-year yield rising, the mortgage rates are tied to that as well, the 30-year mortgage. And so when you see that 10-year going up, you're going to have a readjustment of mortgage rates higher. That's going to further hamper the housing market. Mortgage rates slingshot higher as tariff uncertainty roils markets, according to CNBC today. A swift rise in mortgage rates this week wiped out any advantage of last week's decline for home buyers. And the rates are now where they have been for the past 6 weeks. They hit their highest level in over a month this week, reversing course. Their average rate on the 30-year fixed jumped 22 basis points Monday and another 3 basis points today to 6.85, according to Mortgage News Daily. And that fully erased the decline from last week. The biggest drop in rates so far this year in mortgage rates, it says, came not last week, but in January and February, when the 30-year fixed mortgage fell from a high of 7.26 to 6.74. Despite that decline, it says, pending home sales, which are a measure of initial signed contracts on existing homes, and the most recent, it says, indicator of activity, rose just 2% in February from January, according to the National Association of Realtors. Sales were still 3.6% lower than in February a year ago in 2024. So it says, despite the modest monthly increase, contract signings remain well below normal historical levels, according to NAR's chief economist. So even with rates over the past, let's say January and February, coming down a bit, you still had less signings, less closings, less deals happening. So now we have a spike in the 30-year mortgage rate again. That's going to spell just more pain for people that are waiting to buy a home. And all I can say to you, not financial advice, but just keep your powder dry. Keep putting more away for a down payment. Keep working on that credit score. Opportunities will arise. This will at some point work its way through. And there'll be opportunities in real estate, okay? So I don't want to go too long today. I didn't see anything that I want to share that I thought was super uplifting. I know I keep getting, people saying that, I need to somehow tease out some silver lining. And when it's there, I'll be the first to do that. I will say this, if you are looking to go into other asset classes and stocks like gold and silver, like Bitcoin, Ethereum, XRP, cryptocurrencies, now might be a smart time to start investigating those things and spread your eggs into more than one basket if you haven't already done so. Okay, again, just telling you, do some research if you are sitting on the sidelines, and this may not be the bottom of anything. Gold and silver might keep selling off. Cryptocurrencies might keep selling off. But when this reverses, at some point it will, there's going to be some real money to be made, okay, by people that were patient, number one, but number two, had dry powder to deploy as the deals arose. All right, thank you guys for watching the shows. Thanks for supporting the channel. Please hit that like button for me and subscribe if you're not subscribed. I will talk to all of you most likely tomorrow as this You Know What show continues to unfold in real time. All right, have a great afternoon and evening. Talk to you tomorrow. Bye.